Welcome to the Full Tracy Money Audio Commentary. This is Owen Tracy recording. It's 4:01 p.m. That is Central Time. Today is October 27th. Well, this is a very interesting week where we've had a lot of action, and we had some significant drawdowns in the mega cap sector earlier in the week, and that was on the back of not so much failure to meet expectations on earnings, but rather about guidance for the future. And Microsoft popped on the upside, then came down again. Apple has been declining.
That's certainly
then
approaching the area
Google
where they said that
Alphabet
they would intervene.
had popped
Now we've often
down
seen the market
immediately
test
after
these,
earnings that did not
announcements
meet
by central
expectations,
banks when
and
they say
then
they're going
guidance
to
was
defend
also
a level.
negative.
We can be pretty sure that it's going to test it.
When we
just
think
to test their resolve.
about what's going on
Then
right
what
now,
we also saw
I think
here
we have to
today
at least
was,
consider
the
the possibility
repercussions
that
of some of
the
the earnings
outperformance
announcements
of
that
this
came
group
through after the
is at
market
least being
yesterday.
questioned.
Meta, for
At the same
example,
time, gold prices have extended their rebound over the last 3 weeks and exceeded $2,000 by the end of the week, and this is the upper side of a 3-year range. And certainly that is something that we will spend a fair amount of time talking about in this longer-term broadcast. Of course, it's Friday, so the big picture, long-term audio and video
of
for the
companies
various
to
different
continue
asset
to pay
classes.
for advertising.
Then when we think about what else is going
today,
on,
we had Amazon
in China,
reporting,
they continue
also,
to make stimulus available, and considering that
their advertising
Country
business
Garden
was better than expected.
defaulted
Now,
this
of course,
week and
advertising
the
for
CDS were
Amazon is not
activated,
quite the same thing as
then
advertising
that's
on
a
Facebook.
clear confirmation
Both
that
tend to be more product
there's a lot of
oriented,
risk
but,
in the
Facebook
property sector.
is
And
more
Country Garden
broad-based
being the
advertising
second
business,
largest of the property
whereas
developers,
Amazon
there's
is
also
very
the clear possibility
product-focused.
that Evergrande
And,
is going to be
then
dissolved,
obviously, if you
and
advertise
that
on
its
Amazon,
assets will
you
be
can
liquidated,
expect that your sales
and
will improve.
that is not exactly
Of course,
what
it also
investors
means
might
that
like.
the end customer
I
ends up
think
paying
most
more
people
for
who
it
buy
because
bonds,
those,
they
costs
want to
get
see that
passed
they're going to
along.
get their principal back
Now,
eventually,
when we think about
or
what's
that
going
they're
on
going
in
to
China,
get
the stock
close to
market
their
there
principal.
was steadier in here today.
And who's to say
And
what
I
the
think it is
liquidation
benefiting
cost,
somewhat from
or
weakness
the
everywhere
liquidation
else.
price, I should
And
say,
then
of
the trend
Evergrande's
of
assets will
accommodation
be.
that is
So
building
with
in
those
China.
sorts
Now,
of risks
is it building
on
to
the sideline,
a peak
China
where
is making more
it'll
funds
be
available.
incontrovertible
The
that we're going to
People's
get
Bank
asset
of
price
China has
appreciation
committed
coming through?
additional
I don't think
funds,
that's true
but they're
just
still
yet,
in
but
this
we're certainly seeing
catch-22
an unwinding of
scenario.
the short-term oversold
They're attempting
condition.
to deflate property bubbles.
Then bond
And,
yields were a little bit
doing that in a straight line is very hard.
in here today,
And
down
the
a bit.
kind of pressure
So
that
a little
would
bit steadier action
put
in bond
on the
markets
domestic
now.
economy
That might
is
be
found.
because the
So
stock market has
they have
been
to go
quite
piecemeal,
weak, and
we
might be getting a
they've
little bit of
taken
safe
a lump
haven
out of
action.
asset prices
Then
over the course of
when
the
we
last
think about
2 years,
and
and now
means,
they
well,
are
over the last
providing
several
some
months,
support. But the
we've
last thing
had
they want
this
is a repeat
correlation
of the
between
bubbly
bonds
environment
and
that we had in
equities.
2005
And,
through 7.
The weakness
Back
in
in
the bond
2005,
market
it was
hasn't,
very clear.
really affected the equity market.
They basically said
Now,
to
with
the market
equities
that they're
pulling
putting a
down,
floor under
then
stock prices.
perhaps,
And
we could see
at-
a bit of a
at the
counterflow,
time,
and
the
that
stock
the
market in
inverse
China was
correlation between
heavily
bonds and
influenced by what
equities
was
could
happening
start to
on the
reassert
retail
itself.
sector. And people just jumped on the
Then,
bandwagon,
with
and
the
we had
ECB
a phenomenally
pausing
large
on their
acceleration
interest
in
rates,
the A-share market.
dollar was a little
And
bit
then
steadier,
when the
but it
government
didn't
started
hold all
withdrawing
its
their
move in
support,
here
it
today.
came straight back down
Then,
again.
we have had up and
And
down days.
this is one of the
just
big
about,
challenges
up
that
one day, down the
Chinese
next
administrators
in
have, is
gold,
that
and
the
gold
economy
prices haven't
is
really moved very
prone
much. They were up
to
today,
these
but not
exaggerated
quite yet
moves
being able
both
to
up and
push
down,
through the 2000
because
level.
people are
Very similar
accustomed to
situation with
the
oil
kind
prices,
of
although they
rapid
are
policy
significantly
changes
further
that
below
come
the
with
recent
an
peak when gold is.
authoritarian
And then natural
regime.
gas was also in positive territory
When the government
today.
says
Then
buy,
several of
they
the
buy,
soft
and
commodities, most
they buy in
particularly
size, and they
cocoa
just
and
jump on the
orange juice
bandwagon,
are really
and
very
you get
firm
these
in
accelerated advances. When
So
the government
let's,
is a
go
bit
on
more
and look at some of
taciturn
these
and
charts.
not really talking about support, and then there are clear problems in the wider economy, well, then the prices go back down again. Then this week we've also seen an uptick in geopolitical tensions. What's been quite clear is that gold is offering more in the way of support, or as a vehicle of speculation for people who want to take a position on geopolitical tensions than oil. Oil prices have been considerably more volatile. So there's certainly plenty to discuss in here right now, particularly as we look towards the long term and what the best investment destinations are likely to be. And also, I think, really spending some time to concentrate on where the risks are.